What's up, Money Minds, and welcome back to another video edition of Market Briefs. Today is November 24th, and here's some business and financial news you can finally use. President Joe Biden just took the fight to 15 to a whole nother level. And the president isn't the only one who's raising wages. We've seen companies and businesses all throughout the country start to raise their wages up from their minimum levels. Right now, it looks like wages are rising all throughout the country. And it looks like this new mandate will also mean the end of a federal minimum wage mandate sometime in the next few years. But will $15 an hour be good for everyone? And will it be mandated across the country? Well, today we're going to break down this debate and settle it once and for all, so be sure to stick around till the very end of this video to learn everything you need to know about wages, the minimum wage, and how they are affecting our economy. But before we break all of this down, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world. We can keep making videos just like this one. The minimum wage has been a hot topic in the United States for a long time now. We have seen multiple strikes just in the past few years over raising wages at certain jobs. I mentioned it before, but this is where the movement Fight for 15 came from. Many employees for businesses wanted their salaries or wages increased to something like $15 an hour. The reason being is because they wanted their standard of living to increase, and they thought $15 an hour is what would get them there. Before we kind of go into the $15 an hour argument and what that would do for our economy, I want to first talk about minimum wage as a whole. The minimum wage was part of FDR's New Deal. It essentially meant that Americans had to make a minimum at their jobs. This was all about adding stability into the workforce. So this way, employers couldn't exploit employees by paying them a much lower wage. Now, no matter what job you had, whether it was working in an office or working in a factory, you had to make at least a certain amount. Employers could go up from there, but the baseline was initially set. And this is a double-edged sword for employees and employers. For employees, they are guaranteed a certain amount of money. They know at the very minimum how much they're going to make every single paycheck. Now, hours can kind of come in and ruin this a little bit, and it makes it very hard to determine what you'll actually make. Taxes can also throw things off too, but the bottom line here is that it's a little more consistent. But for employers, it's a little more complicated than that, because now employers and businesses have to figure out how they're going to offer all of their employees the same exact wage. This is ultimately going to cut into the costs of a business, because now you have to calculate that amount of wage every single month at bare minimum. Some businesses can easily afford to pay that bare minimum. Other businesses cannot afford to do this. The other thing that a minimum wage does is create a universal standard of living all throughout the United States. So if you have a job, you have to make at least a certain amount, and that means that there is a certain standard of living throughout the country. Otherwise, we'd have a difficult situation with competition. As we know, our economy runs on competition, and we'll get into that a little bit later. But if there is two businesses in the same exact industry and one company is offering a lot better of a wage and the other company is offering a lot lower of a wage, well, where do you think people are going to want to work? This way, in theory, if it's the same position in the same industry, both companies should be offering a comparable wage. Ultimately, that's good for the worker because it protects their well-being and health. And the hourly minimum wage for employees has increased quite a bit since it was created. In 1938, the hourly minimum wage was around 25 cents an hour. All the way through 2009, it was set at around $7.25. But since 2009, the federal minimum wage hasn't really gone up. And this is when we've started to see a lot of fights between employees and employers over wages. You have to ask yourself, well, why do people want the minimum wage raised? Well, people want the minimum wage raised because they want a higher income because everything is getting more expensive in our society. Every single year, inflation goes up. Typically, inflation rises by around 2 to 3%. However, in October of 2021, inflation went up to around 6.2%. So if you're working at a job that offers you minimum wage, you can't exactly pay for everything if your wage doesn't continue to rise faster than inflation. So a lot of people decided that $15 an hour would give them a standard of living that would allow them to do everything they wanted in life while also not totally hurting their businesses. So the bottom line is people want more money so that they can better their life. They want to be able to afford all of the things and not have to worry about where their next meal is coming from or how they're going to buy things. The lower your wage is, closer to the federal minimum wage, then the less you're going to be able to do in society. So that is why people want the federal minimum wage to be increased to around $15 an hour. But why hasn't the federal minimum wage been increased since 2009? Well, so now we kind of dive into a little bit of the politics of why the minimum wage hasn't been increased. There is a lot of experts that say that raising the federal minimum wage and minimum wages in general wouldn't really help our economy or the people who are fighting for it. Essentially, all this would do is create more inflation. Now, inflation is the phenomenon of when our money supply is increased. So as the Federal Reserve and our United States government decides that it needs more money, whether that's to pay off debt, work with private contractors, or pay off bills, they print money. And a lot of times they print trillions of dollars. As the Federal Reserve prints more money, that means our money is becoming devalued. This is because there's more of it in circulation, and the more of something you have and the more people that have it, the less rare it becomes. If it's a lot less rare and everybody has it and has access to it, well, it's going to become devalued. And typically when people have more money, they go out and spend more money. So the more money people have, the more prices and services go up in the United States. This is a symptom of inflation. Think about inflation this way. If there are only $100 in the entire United States and you have $1, that means you have 1% of all of the wealth in the United States. However, if the Federal Reserve decides to print 100 extra dollars, well, now there's $200 circulating throughout the US. Your $1 is immediately devalued because it is not the same percentage anymore. It's only a 0.5% when before it was a full percent. The only way to get back up is to have more money. So you're gonna need $2 instead of $1. Now this continues to grow and grow until you have trillions upon trillions of dollars in circulation throughout the economy. And the basic argument here from a lot of experts is that if you were to raise the minimum wage and make sure that all employees in the United States were making at least $15 an hour, all that would do is create more inflation because now everybody has more money to spend. As people spend more money, companies have to produce more. And if there's more production being done, companies now have to pay for that additional production. They don't have the money to pay for that, so they're going to raise prices, which means everything around everyone is going to cost more. So yes, ultimately, people would make more, but at the end of the day, everything around them would cost more. But there are some things that can't really go up in value. For instance, if you were to get a fixed rate mortgage, that means you're going to pay the exact same amount on your mortgage every single month. If your income suddenly increases, your mortgage is always going to be the same. That means you're actually paying less on your mortgage every single month. Now, inflation still hits your mortgage because your taxes and other fees are going to be associated on that, and that's typically going to go up every year, but your actual mortgage payment is staying the same and you just keep making more. So there are some fixed payments that couldn't change, at least not legally and not right away. And I think the other argument to raising the federal minimum wage to somewhere around $15 an hour gets really complex when you start to talk about the different areas of the country. Sure, $15 an hour in the Midwest might take you very, very far. However, $15 an hour in a major city like Los Angeles or New York City isn't really going to do much. So raising the federal minimum wage in this case wouldn't really help you overall, and all it would do is raise inflation. Sure, it might be a step in the right direction, but the bottom line here is that you're not making enough anyway in these states and in these areas. You're going to have to make a lot more anyway. So that means there's a lot of people out there that believe that it's not really the federal government's job to raise the minimum wage. And finally, the way our wage system in the United States works is a little bit different than how it works in a lot of other parts in the world. When you have a job in the United States, you're paid based on the value that you bring into that job. So this is the reason and argument why cashiers at McDonald's or some other fast food restaurants are not making the same wage as people working in elevated fields. Work is something that is different for every single person. And what it means to work hard and just to work in general is different for every industry. For some, working may be sitting at a desk and taking phone calls. For others, it may be working outside on a construction site. All work is different, so when the federal government decides to make a federal minimum wage, that means they're basically saying that all work is the same. But things get even more complicated when you talk about the term value. What does value actually mean as an employee? Does the person working at McDonald's as a cashier bring in the same value as another position in a different industry? Well, it all depends, and it depends on what your experience is and the skills that you use on that particular job. Anybody can be trained to be a cashier at McDonald's. However, not everyone can be a great salesman. However, I have seen some pretty skilled cashiers in my day, and they can definitely make the entire experience of you going to one of those restaurants a lot better. So skilled can be an abstract term too. But what I think a lot of people have a problem with is that they don't see all of the value that they bring in. Employees can bring in a certain amount of customers and sell a certain amount of products, but that money doesn't always trickle back down to them. The value that they're bringing in doesn't always trickle back down. So a job ultimately pays you for the work that you're doing. And because our society works in a system of supply and demand, if you're doing a job that is in very high demand, but there's not a lot of people that can do that job, then most likely you are going to be paid a lot more. However, if there is millions upon millions of people in the country that can do a specific job and it's in very low demand, you're probably not going to make that much. But ultimately, I want to bring up the most important aspect of this debate. Whose job is it to make sure that somebody has a livable wage? Is it on companies to provide a livable wage to employees, or is it on a person to make sure that they are financially successful? This is very, very complicated. If you look at it from the job's perspective, then think about what a job really does. A job affords you to be able to buy things today. You essentially go to work and your employer gives you money for that job. But at the end of the day, it's up to you to decide how you're going to spend your money. And you can spend your money on whatever you want. Can a job even make you wealthy? Well, at the end of the day, most jobs, 90% or more of jobs in fact, will not make you wealthy. The income that you earn at your job can help you grow your money if you use it the right way, but ultimately just making money alone isn't how you build wealth, and it's not how you get ahead. It really comes down to your financial decisions. Are you using your money the right way? Now, a lot of these debates come from the fact that they're not making enough money to even support themselves financially. A job can't continue to pay you more and more every single year because that has costs associated with it. And a company's role is to make money. They want to make money at the end of the day and please their shareholders. So what this ultimately comes down to is businesses. Some businesses are going to be well equipped to pay their employees more. However, there's nothing really forcing them to. And at the end of the day, if the federal government did decide to raise the minimum wage up to around $15 an hour, that would probably just boost inflation. Inflation would hurt you, and it would also hurt those employees who are asking for a substantial raise. And honestly, this is a way bigger debate than if the president was to change the national minimum wage. There are a lot of other things that are associated here, so you'd have to look at all of those markets as well. You'd have to look at housing and how much utilities cost, and also groceries and pretty much the price of everything. Raising the minimum wage only helps if those prices don't eventually go back up. The reason being is because if people make more and prices stay the same, then they're actually making out here. But that most likely won't happen, so in order for this to go through, the federal government will have to look at all factors associated with the $15 an hour debate. And that gets really tough. because right now the United States is supposedly a free market, meaning that people can pretty much do whatever they want when it comes to prices, buying, and selling things. But if the United States government starts to come in and heavily regulate our markets, then it's not a free market anymore, and capitalism is pretty much going to crash. This could change everything. So with all of that being said, are we going to see the federal minimum wage increase in the next few years? Well, more than likely, yes. However, most companies will pay you more than what the federal minimum wage is. Now, it might not be much more, but more than likely, you will make more than that. This will need to be adjusted as your employer adjusts your salary and wage every single year. Typically, employers will give you around a 2 to 3% raise every year, and this is because they're battling with inflation. They know prices around the nation are going to start going up, so they give you that slight bump up in a raise. It doesn't really do much for you though, because you are just meeting inflation. You're not actually beating it. The only way to actually beat inflation is to have your money grow faster than whatever the inflation rate is. So if inflation is around 2 to 3%, that means your money is losing 2 to 3% of its value every single year. However, if your money is growing 5, 6, 7%, well, that means you are beating inflation. And that is the ultimate key here of this $15 an hour debate. Yes, you can make some money from your job, but honestly, that money is not going to be enough in order for you to grow your finances. We talk a lot about this on this channel and the main Minority Mindset YouTube channel, but working your job is not enough. You have to do more. You have to be a diversified investor. Because right now, this new action by Joe Biden for contract workers only really helps them with inflation. They're not really making much more money here. And the same thing will happen to you if the federal minimum wage goes up. This is why it literally pays to be financially educated. But now I want to hear from you on this issue. What do you think about the minimum wage debate in America? Do you think the federal minimum wage should be raised to around $15 an hour, or do you think it should be exactly the same? In addition, who is it on to create financial prosperity in America? Is it on employees, or is it on the businesses that employ them? Whatever your thoughts are, leave a comment below before you go. But that is it for today's Market Briefs video breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.